This is the Analysis in Chains with Nathan Williams and Neal Kieran.
Welcome to Analysis in Chains by CryptoNews.com, your daily source of all things crypto. How you doing, Neal?
I'm doing good, Nathan. I'm doing good. I think summer is nearly here in Montreal. It's warmer, but it's also wetter.
Sucker! It's 21 degrees and sunny over here in Berlin. I took in some sun yesterday. Got a little tan here. It's beautiful.
Look at you! Look at you! You're becoming like a Berlin pop star with your tan and living it up. While I'm here, all pale. And
you can't
wait to see the sun.
Can't pay me enough to go back. So the transition to move Analysis in Chains to Crypto News is underway. You may see we've got a new logo for the website. We're going to be doing that over the next little bit, moving everything over. It's exciting being part of a bigger brand, man.
Yeah, I'm excited, and because this is the thing about crypto, it's all about partnerships. We're all trying to do our bit to help add value to the crypto world, and I think we have our strengths, and I think that Crypto News will help us to bring spread the podcast, help more people learn about the podcast, help with the promotion, and it's gonna be win-win.
I wanted to talk today, Neal, a bit about valuations, because a lot of people have said just how crazy valuations have been in crypto. And now that we're, it's not quite the same as last year yet. I think we're going to get there. But ever since we've been approaching and, we hit 10,000 with Bitcoin price recently, the talk comes up again, like, isn't crypto crazy overvalued or and that sort of thing. And it seems to be an important subject to tackle, don't you think?
Yeah, I completely agree. I think that with crypto valuations, it's a bit easy or too easy for analysts out there to shoot down the price of Bitcoin or other crypto, and they say, how is this value? Like, it's pointless. And I've often referred back to Facebook back in the past and how they said the exact same thing. But the thing about present day, Bitcoin price, I think we need to look at present day valuations of other tech companies. And while Facebook has matured as a company and its price to earning ratios and things like this to help us understand its valuation are a bit more reasonable because it has matured as a company, it doesn't mean that tech valuations are no longer crazy or obscene. I think one of the best examples out there is Tesla. So I don't know if people were listening to the Tesla earnings call this week. Did you listen to it, Nathan?
Actually, I've been following Elon Musk, and I was looking on on his Twitter, and there was a lot going on regarding the earnings call, but I hadn't actually read it or heard it or whatever. Tell me, what is an earnings call exactly?
So I think the whole Tesla story is very interesting and really sums up actually what's happening in crypto. So Tesla is a publicly traded company. As many people know, Tesla make electric cars, and they're probably some of the sexiest electric cars out there at the moment, and they really were ahead of the curve for many years. So as a public traded company, you need to have earnings calls, which is quite different to the crypto land. Crypto land, I think, we're more dependent on roadmap updates, and some of them will have conference calls to discuss what's going on, but a crypto company or an ICO or even Bitcoin aren't really accountable to anything. In terms of how they're trying to create value. I guess they're doing their best to promote an ICO, or they're doing their best to promote their token or their coin. And obviously, if we're happy with what they're doing as progress, we either buy or sell their crypto. In the public world of finance, you have to release your income statements, your balance sheets, to really understand the health or the financial health of a company and how well it's progressing, which we don't see in crypto at the moment. We only see really the price of valuation, and some websites help us understand the amount of transactions, block time, and whatever. So with Tesla, a lot of pressure has been mounting because they've been losing a lot of cash. I think they burned through $1 billion of cash in the last quarter. And the thing is that its valuation is not really dropping. So they're And they haven't been meeting their targets either. They're having some issues with the Tesla 3, and they were not producing as much as they wanted to, which obviously will impact revenue. And so there's a lot of pressure building up in Elon Musk. And Elon Musk, I think a lot of people really look up to Elon Musk because he has so many, amazing projects, be it with SpaceX or now the Boring Company.
He's
And now
started
he has,
Beyonce. I mean,
yeah,
if he speaks anywhere, you got 1,000 raging fans going, Elon, throwing underwear on the stage, that sort of thing. It really is like that. I've seen him speak. It's pretty nuts.
yeah. I think he's like the Steve Jobs of today. The way there was like a cult around Apple as a company, a lot of that cult was really built up by Steve Jobs, whereas now Elon Musk is a cult in himself. If he's not if he's not amazing us with ideas like a tunnel for moving cars around, he has a flamethrower. It's like he's
Tony
still
Stark.
a little, yeah.
He's Tony Stark. Iron Man.
He is like a modern day Tony Stark. You're completely right, and he really does capture our attention and our dreams in terms of what humanity can achieve. But the thing is that when it comes to being an entrepreneur, the biggest reality you have to face is money and valuations and making money. And he's been under a lot of pressure because he really hasn't been hitting his targets. So in this earnings call that happened last week, he was getting a lot of questions from Wall Street analysts saying, asking, how much money are you going to make? Are you going to be making the production targets? How are you going to improve on this? And they're all asking him about his problems and what solutions he was going to be having to the problems. And he was getting really fed up. He was telling people, I don't want any more boring questions. I don't want this. This is like a waste of my time, was effectively what he was saying. And when asked about his moat, how is your moat? Because this is the term used in most tech companies to describe your business model and how to protect it. And he was saying, I don't believe in this whole moat idea. It's all about fast innovation. That should be the competitive advantage. And what was very interesting was that questions coming from the Wall Street analysts, but also some YouTubers were doing questions, and their questions were very, very different. They're more about, tell me about your SpaceX program. Tell me about this new feature on your Tesla car. Tell me about all of this new innovation you're bringing to this world, which really goes to show the two different mindsets of tech and Wall Street. Wall Street people do care about money because, hey, you've taken our money. We want to make sure we get a return on investment on that money. Whereas the people on YouTube were just only cared about the tech and its potential. And so despite this erratic call, Tesla shares only went down maybe 5%. And he even told people, if you don't like volatility, don't buy our stock, which is completely the worst thing you could say as the CEO of a publicly traded company. But this kind of sums up the world of tech. It's like, this is going to be a bumpy ride. We're all about innovation. We're all about, changing this world. And, we don't care so much about the laws of finance in terms of meeting quarterly targets or burning through cash. The thing is, finance is a reality in business that if you don't have money coming in, then you can't pay people. You can't make things. But at the same time, people like to do trade-offs in order to make, innovative products. And so despite all of these problems with Elon Musk, his valuation is still, the valuation of Tesla is still obscene. It's still crazy, which really sums up crypto today when people try to understand how it's valued. Well, people don't think about the mechanics of finance. They think about the potential it has for the future.
And rightly so. Honestly, there are actually traditional industries that are valued in very similar ways. Think of a drug company. How much money gets poured into the research into one molecule, and you go to thousands of molecules and narrow it down till you have one that's going to make up the money for the rest because it's going to be innovative. It'll be the next aspirin or something. And with something like electric cars or space travel, the idea isn't that it's making money today. It's that if the entire industry is going to shift, then it'll make money tomorrow. And you have to value based on that, because otherwise, how can you get in on the ground floor? You'd be way oversubscribed, and supply and demand sort of dictates it. And I think that when we're valuing crypto, The only difference between that and valuing other tech companies is how accessible it is. The average person can't get into a tech company. I mean, yeah, you can get into Tesla because it's publicly traded. It's on the stock exchange. But, try and get into an innovative startup that is ready to scale without being a VC or being an accredited investor with, a couple 100,000 angel funds sitting around and ready to dump into some companies. It's hard. It's very, very hard, because you have to sift through hundreds of companies and figure out which ones have a good team, which ones can get you there. You create the term sheet. It's a whole process. Whereas with crypto, people do the token sale, they do the ICO, and you can just buy it right up and see how it goes. You can read the white paper. You can hear what other people are going in for. And the idea of having, a company that's valued 200 times earnings, well, it's about the same, with between a crypto startup or another tech startup. It's much faster and much more accessible.
I completely agree. It's to be accessible or have the opportunity to invest in, a future startup is an amazing opportunity that none of us ever had. Like, I remember when I used to follow a lot of tech companies, and I'd be counting down the days until they had an IPO because I wanted in. The problem was that the return potential was gone by the time it hit the public market.
Yep.
If I were when I first came across Facebook, I was like, okay, I would love to buy shares in this company. I had to wait. I think I had to wait 4 years until I could, and that was on the stock market. Hey, I got a great return when I finally sold my stock last December, but I would have made a lot more if I was able to buy it back in 2008 when I first came across it. And so this is the big shift we have in terms of investing for tech. Now, the thing is, I like to look forward. I like to look at the bigger picture. So while it's great to be able to partake in venture capitalism in our own way, it does come at risks, and people need to be aware that while it's great to have this opportunity on the bigger picture of things, it doesn't mean that these valuations will always stay 200 times earnings or 200 times future potential.
Sure. I mean, higher risk, higher reward. If it's going up that much, you're taking a big risk.
So people need to look back on the past and say to themselves, okay, what are the risks that could be associated or that could impact my investment? And of course, it's always going to be down to a potential recession. And I think the one that can impact tech the most could be a US recession. So people need to be mindful of the bigger picture, because if the economy were to crash, you may say to yourself, hey, this should impact crypto, because if people like crypto and want to use crypto, therefore there'd be a lot of demand. But we have to remember that in times of not US recession, but any sort of recession, people tend to cash out. They want to put money under the mattress. They want to save up and just, feel like they're protected with their own cash. And so that will always be the big risk for tech, that no matter how innovative it is, when there is if people do get scared, the money goes into havens. They want to protect their assets. So always, be vigilant and, be mindful of these realities, because tech hasn't had a major correction since the financial crisis. And even then, that was not caused by them. That was an external thing. And the biggest tech correction of all time was obviously during the time of the dot-com bubble. So people need to be mindful of this, that things don't go up forever. And while crypto has, as we all know, the big potential, I feel like getting involved in crypto is like pre-dot-com bubble or even pre-social media bubble, before there were so many variations of social media, that there will always be this sort of potential bump ahead, and people need to be mindful of that.
Yeah, and we've speculated before that there might be sort of an inverse relationship between Bitcoin and the stock price, but that hasn't played out over the past few months. We've seen actually a direct correlation, that people are viewing, crypto prices as stores of value akin to the rest of the market. And So, with instability, with potential tariffs, potential armed conflict in various areas of the world that could threaten the regular market, these sort of things can also threaten the crypto market. So it is important to keep in mind. I'm still very bullish because we've got a technology that's going to change the world, but at the same time being cautious because it's affected by market forces like everything else.
Exactly.
Yeah.
I totally agree.
All right. Well, events coming up. If you're in San Francisco on the 25th, we are going to have an event. It will be me. I will be speaking with our good friend Frank, who is down there, who is our local on-the-ground person. It's a free event. You should totally come out, hang out with me. We will chat about things, and we will record a live episode. And it'll be a good opportunity to make a new friend. So that'll be on the 25th of May. Anything else, Neal, before we sign off?
I'm getting more into mining, and I can't wait to share my experiences of how that's going, what I've learned with you all, and I'm sure we'll talk about that in the coming weeks.
Stock up on your Raspberry Pis. All right. Have a great day, everyone. Keep on hashing.